1.7 trillion gets you excited. It's the data that you're looking at across this sort of whole host of assets. A lot of it's very opaque. A lot of it's art, hedge funds. Like, how are you bringing clarity to it?
Yeah, so first, thanks for having me on the show. When we started the company back in 2009, it was in the wake of the financial crisis. And what a lot of people, as $7 trillion evaporated out of the market, what a lot of people recognize is that the $120 trillion owned by individuals globally was a mix of liquid assets that are held in custody banks. But to your point, a lot of illiquid assets that are in private equity, hedge funds, real estate, et cetera, are really hard to track. And a lot of people just have people in Excel to manage those assets. So Addepar has used technology starting in 2009 to bring together all that data in a way where people can look at the entire portfolio in one place. And this solution is one that we're bringing to family offices, to RIAs, as well as banks like Morgan Stanley. And that's what gets us to the 1.7 trillion.
How granular can you get with this data? Like Caroline was mentioning, this is a lot of really hard to value assets, artwork, maybe yachts potentially. I mean, right. There are assets all over the world that these people keep their money in. How granular can you get?
So we've modeled the data within Addepar to be able to represent every type of asset that a client has in their portfolio. And so to your point about granularity, for example, for private equity investments, the types of things that investors want to track are the commitments they've made in funds, the paid-in capital over time, the distributions that have been paid out and the extent to which they're recallable. So you can look across the whole private equity portfolio and answer questions to understand how much you still have yet to commit, how much has been paid back, as well as, for example, for fixed income, the details around the idiosyncrasies of fixed income. We modeled that data in a very deep way for every position, the transactions, the underlying tax lots, so people can run true performance reports and evaluate the risk that they're exposed to.
Can you give us an example of the different ways that the different players use the data? You mentioned family offices, there's also registered investment advisors. How do they use the data in different ways?
So in all cases, the question they want to answer for clients is, what do I own, what am I exposed to, and what should I do about it?
Pretty basic questions.
That's right, but they've been really hard to solve because you haven't had a common foundation. You have millions of islands of data and a whole bunch of people in between. Where there are some discrepancies, for example, family offices, if there's a new opportunity that hits their radar and they want to consider their liquidity that's available and whether or not they should invest in that opportunity, that's the type of analysis that they might do. If you're running, say you're the CIO of a large bank and you want to look across all the advisors and understand which clients are going outside of their investment policy statement. That's a very different type of workflow, but because we've represented the data and all the calculations to run at scale, we're able to accomplish that as well.
You have pretty industrial strength backers here, right?
Yes.
You have Joe Lonsdale, you have Peter Thiel, you yourself worked at Palantir. You know a lot about data. But this is a really secretive client base. Why are they trusting you with all of their data?
Good question.
Yeah, I mean, the business problem that, again, they all face is they would love to be able to answer the basic questions, and they can't answer the basic questions until all their data can land in one place. But you're absolutely right. The type of data we're entrusted with is incredibly sensitive. And so from a security standpoint, from the very beginning, starting in 2009, we've invested massively in the technology, the operations, all the controls around it. So we've upheld really the highest standards and set a new bar. So the way we aggregate data, every bit of data is encrypted. It flows over what I call industrial strength plumbing, where the client controls which data flows to where, and they have full ability to stop that if they would like.
It's interesting that you started this conversation by painting the picture of what happened in the previous crises,
right,
and the sudden need to understand where all these hard-to-track assets were going. Sonali's great reporting has shown that people on your board have said, actually, in times of crisis, they think you can do even better. Do you agree that this is when you're really going to come home to roost, as in when and then there are sell-offs?
Yeah, look, when we're 12 years into a bull market, so when things start getting a little bit jittery, that's exactly when clients need their advisor the most. And so we see the world of advice as being driven by human-to-human trust. And our job is to make advisors enabled by tech and enabled by data so they can be more proactive in serving the needs of their clients. And so for all the eventualities that might play out in markets or in the political climate, et cetera, our advisors need to be prepared, and Addepar helps them do so.
Something interesting, also 12 years into a bull market, you have all of these advisors that are looking to leave large banks and break away on their own. Right. You're a huge beneficiary of this. You're working, as a startup yourself, you're working with all these startup advisors. Why are all these people leaving large banks?
Yeah, so we're an enabler for it in a certain sense, but ultimately we want to serve advisors who are, prioritizing above all else the client outcomes. And so some advisors make the choice to go from a large bank they've been working in to go independent. And you're completely right that now the technology that's available to independent advisors really levels the playing field in a lot of different ways. So once we entered that space, what we've noticed is that the number of multi-billion-dollar breakaways is increasing. And you're right, we're winning the lion's share of that business. So there are a variety of different reasons why people choose to break, but once they do break, now they have the tech available.